Welcome to the Trading Lounge and the Day Ahead Report. And here we're looking at the US 30, the Dow, and the market has pushed up higher, but as I've been sort of harping on about lately, is the 13,800. 800 is a profit-taking number, so we'll be seeing a corrective pattern across here, and that will also be at the S&P 500 at 1,500 and the ASX 200 at 4,800 and the FTSE at 6,200 and so forth. So, it's what we normally see at these levels is that, well, there's not a lot that can happen in terms of corrective patterns. There's really sort of two scenarios that can sort of happen, and we always sort of edge towards the trading levels classic sort of pattern, which is basically wave 3, wave 4, wave 5, and then an A and a B and a C correction, which will be even larger. So it's just a process we've got to work through, and where it's unfolding now. So there's not a lot we can do about it, but it's not really a trading sort of environment. And if trading, then shorter trading ranges and smaller position sizes wouldn't go astray, because markets are trends and corrections of different degrees, and we've had a trend here, so we can expect this. But look, basically the top of wave 3 here, wave 4 and wave 5, and that will be the same for the S&P 500. If we can get that up there somewhere, that's there. I'll just see if we can get another one. Just bear with me here, a bit unorganized this morning. Okay, here we go. This is the chart we've been sort of working on. So yeah, well, that's it really. So 1,500, we'll see, there's always a sort of reaction. Larger orders basically sit at larger whole numbers, and that's what will sort of unfold here. But as mentioned, we'll be looking for this sort of wave 4 here, a reaction here, and eventually sort of a push up through here, and then a larger correction there. So we can pretty much put that there now. It's like that. And we'll be looking at a wave 4 here, which should pull back 38.2% of the wave 3 here. But the other thing too is that when you're working with large numbers, they can really sort of skew the patterns that occur around them. So, but anyway, we'll see how that sort of pans out. We're also seeing commodities become weaker as well, so they're also going to be a driving factor with the markets as well. Now, the ASX 200 is above the 4,800 here, but it doesn't dismiss it from having a larger correction from here. There is all this through here is good support and part of the accumulation of sort of orders, and yes, we could push higher. And it's even though we're expecting a larger correction here and larger swings across the 4,800 in line with the S&P 500, in terms of analysis is one thing and trading is another. So it's quite important, as always, to trade what you see. And in that, I mean, the Elliott can be great for getting direction and understanding things as the trading levels are, because the trading levels really just are about price. But if a market is going to push higher, well then we really need to run with that, and if that is the case, then we'd be looking for the top of group 1 here to have support here. So if that was the case, so this is a little first high above the level. So if this was like an A and a B and a C wave here, a 3-wave swing, and then find support on the 48.30, the top of group 1, well then after 3-wave correction here and support, then you would naturally go long from that point there. So these are 3-wave price actions here. That's in 3 waves. That little one there's in 3 waves. That's in 3 waves. That's in 3 waves here. So you might have gotten sort of sucked in here and stopped out here, but you'd always keep stops under the 72 number anyway. So, but the 3-wave correction is what you're sort of looking for here. So that would be, I know that's in 5 waves there. So there would be some sort of counter trend, another move down. If that, how it unfolds, that's 5 waves, so 3 waves, another 5 waves, which could turn into another larger 5 waves down. We don't know that yet, but it could be an A and a B and a C here, and then support back up through here. So, but the top of group 1 here will if it offers support, then you have to trade with that. That's basically all I'm saying. Otherwise, we can expect a larger correction across here and smaller trading ranges. Let's have a look at commodities as they will be a driver in this. But just have a look at the Shanghai market here, China as well. They had PMI figures coming out yesterday, and also talking about this particular market here. The Shanghai market is, we've had this move up through here, and as I was mentioning, that a trend as a correction has a beginning, a middle, and an end, and we can see that it's like creeping here, isn't it? You don't need to be Einstein here, but this is the top of Group 1, the 2300, 100, 200, and 300. So it's just normal to expect a correction here, basically, and the move yesterday here, when you see that bar there, that's on higher volume, the spike and lower close, that's definitely a turning point in the market, and profit taking. So it's part of the process that we've identified here in becoming weaker, and should continue to become weaker as well. And obviously this is going to reflect back into other markets, especially commodity markets such as ours. So there's no driving factor here. That's basically what I'm sort of saying. And with the S&P 500 at 1500 and the Dow at 13.8, and commodities being weaker, it's likely to see our market become, the ASX 200 become weaker as well. The cash market. This is the cash market here, and also as well is that this on the daily chart here for the ASX 200, it hasn't corrected at all, and we're looking at this being a wave 3 and a wave 4 here, and then we're looking for the last little 5-wave sequence up here. But that may be the 1, the 2, the 3 up here, the 4 and the 5 up to here, and then the correction. So, but either way, just pointing out that if you've got long-term share trades out there in some of the larger leading markets, well, you're going to see them sort of correcting, and the Australian dollar is a good leader for the S&P 500, and that's rolling over at 105 as well. So there's the evidence is starting to become stronger for a correction here. Anyway, let's have a look at the commodities. Okay, the all-important copper market is a bit of a guide stick in terms of base metals, and so just sort of recapping here a little bit is that we're actually in a larger corrective pattern through here, but just in dealing with this situation here is that we've got this 3-wave swing here, and as mentioned before, because it's a 3-wave correction in an uptrend, that means that we should get a new high above here in due course. Also, just to sort of support that that evidence is the 5-wave structure that we've got here in wave 3, 4, 5 here to make wave 1, and as you know, we're looking for an ABC correction, like an A and a B and a C correction through here. It's basically a 3-wave swing, a little bit like this guy here, but a smaller version of that. And the 61.8 is around the 64 here, so we can expect a spike down through here. We've got this sort of trend line through here, which will have obviously some bearing as well. So look, we just really need this to play out here. Once this is played out, take a few more days, then we'll see further upside from there. So I'm saying this because it's a positive thing for Australia and Canada and South Africa and Brazil and so forth, any commodity country and dollar and so forth. But once again, it's not ready to go just yet. But wave 1, wave 2, wave 3 should take us up to the 380 at least there. So wave 3 will be longer than wave 1 here. So, but a little bit more. A process to play out through here before we see that. Right, the oil market as well. It's a little bit oil follows stock, so to speak. So we're looking at a wave 4 here, and the wave 4 just the simple version of a correction would be the A, the B, and the C here. But this is also an A and a B and a C in here as well. So we'll eventually make highs through here. But I'm just wondering, this could just move straight up from here. But just for the time being, I'll line it up with the other commodities in terms of an A and a B and a C wave to unfold through here. But this can certainly be the third wave in here. So this would be up for one here and back for two here, or back for two here, and this would be the 1, the 2, the 3, the 4, and the 5, and this would be wave 4, pulling back to wave 4 of one lesser degree, and then moving up through there. So even at this stage here, possibly the 3-wave price action through here, but just give this some time to work through here first, okay? And then, you know, if the 96 becomes the support here, then fine. This is the 96.50 here, the 65 number as I call it. So just allow this to play it, but it will follow a stock, and the S&P 500, as just mentioned, we're looking at that as also in a wave 4 at the moment, pulling back, and then a wave 5 to the upside. So crude will go up. It's just a matter of time of allowing it to play out. The precious metals are also unfolding as well. This particular sequence up here counts better in the silver market, a sort of a cleaner 5 waves up there, essentially like this. The 1, the 2, this is silver, the 3, 4, and the 5 up here. So basically we're getting also once again A and a B and a C correction through here, but also in taking the levels on board as well, is that normally with price, like such as 32 here, the distance above will sort of equal the distance below, and that will be the range. So this C wave may not come down here as such here. This can go, you know, this is the supply level through here, so that's sort of roughly where it can go. So we can get a sideways correction across here. But the beauty is that if we do get 3 waves here, and it's very clear, and then we get support here, then because we've got the 3 waves here, then we know that we'll be making a new high above here. So gold's much the same as well in its structure as well. The 61.8 is, this is gold here. So the 61.8 is, you know, as you can see down at the medium level here, 1650. So we have to allow this to play out. It does appear that we've got an impulse wave here, 5 waves. So that means that we will be seeing a 3-wave rally through here, and then another 5. If we get 5 here, then we'll get 5 over here. If we only get 3 here, then we know that we'll be making a new high above here in due course. But we've got 5 waves developing down through here, so it's still unfolding. So we'll get a bit lower for the A wave just yet. So you have to trade the sub levels here, but bottom line is that there's not a lot sort of happening here at the moment, and not a good idea to trade short here. Better to wait for a nice clean 3-wave rally here. That will be 5 waves, 3 waves, and 5 waves on the intraday, and then the C wave is always in 5 waves, which will have a probably some sort of equality in length with the A wave. And what we find with corrections is that the A wave is normally quite sharp, like it is, and the B waves, whatever it is, just in 3 waves. But the C wave is not normally as sharp as the A wave. So the A wave is normally sharper. So if we see the C wave in a lazy sort of more of an angle here, 45-degree angle, then you know that it is a C wave and it is corrective. Because if the C wave is sharper than the wave A, then it would be more in line with a like this here, that wave, you know, if wave 1 is down and this wave down here is sharper, then it's likely to be a larger pattern unfolding here, like a 5-wave structure. So the personality of this third leg down can really distinguish if it's going to be a wave 3 or a C wave simply by the angle that it's on. So anyway, just a little bit of a tidbit there. All right, let's have a look at FX, as the US dollar is still sitting above the 80, and we need that to be sitting below the 80 as resistance. Okay, the US dollar, there's, as you know, we're in a corrective rally through here. What I've have been a little bit unsure about is if that we would be sort of pushing back up to the 80-30 here. I thought that would be the case, and we could still do that because, as you can see across here, that the market has got the 80 as support, but what we are looking for to confirm the next move down is the 80 becoming a retested resistance. So basically, sort of banging its head, at the 80 here rather than support. So that's sort of what we're looking for. Once we've got that there. And that will probably come when the S&P 500 has completed wave 4 and we're going up for wave 5. But the flip side of this is that is the long trade on the euro. So when we look at the euro here, we've got this this pattern across here, which is a corrective pattern in a bullish market because the market's moved up, and then it's got these overlapping wave structures here. So we're considering it a triangle, and it's across the 133 here. It's got nice support in here. It's really been tested here, as you can see. So it will break to the upside. We've also just relabeled the triangle pattern here to a just a slightly sort of larger triangle. That the E wave here is not finished yet. So just considering all of this as part of the C wave here, a bit headline driven here and a bit difficult to work through, but they are all 3 wave patterns. So we've just had to label it as such through here. So yeah, a little bit more to play out here as such, but yeah. So this structure up through here, just labeling that as wave D and then an E wave through here. Now, if we're wrong about that, then what will occur is another move up to here, and then an A and a B and a C across here, then support here. So then we'll be working with the 134 now, and that will offer really good support too because of this, this correctional pattern through here. Will be the support factor much later on as we do move higher through here. So otherwise, if you're intraday trading, then just use subgroup 2 here, and you need the 13372 as the support there to push higher. But a push higher through here will only take you into group 1 here of 134, so 10, 20, and 30. So not a lot of movement here. So if there is a move up through here, then you'll only see another 3-wave swing across here. But it should be reasonably sort of small and so forth, because we do have this sort of accumulation process through here. Richard Wyckoff's work, and I recommend his reading. He's from the 1880s and 1930s. He's the one that established the relationship between price and volume, which is something that I like to use a lot. So, but he would be looking at this as the accumulation process and then the distribution process through here, which should equal each other, sort of 1 unit for 1 unit, so to speak. So worth understanding that. And corrections are a process. They are profit taking, they are stops being triggered, and they are value buyers coming in. But it is a process, and an emotional one at that. But as they mature, corrections are the foundations for the next trend, and they need to be understood for 2 reasons. It's where trends are engineered from, and secondly, it's normally the corrections that take your money as well. So understanding your enemy as such, and is an improvement for trading. So and also, corrections are the setup for the next move. So well worth understanding. In Elliott terms, there's 11 or 12 of them that's debated through Elliotticians, but each market normally has its own personality and its own sort of half a dozen types of corrections, and those corrections will obviously be small and large and also skewed at certain numbers, but they are reoccurring sort of patterns as such, but just different sizes. Alrighty, the Australian dollar is also falling out of bed as well across the 105 here area through here. The move down here has to be counted as an impulse wave, so we're looking at this moving further down as well. So we expect the Australian dollar to do a little wave 4 across here and move further down through here. So you'd use the subgroup 2 area through here. If I've just got another picture here for this. Thought I had a smaller intraday chart here, but it's on the other system. But look, expect a retest back up into the subgroup 2 area here and then failing from here. So basically shorting a failed retest at 72 there for further downside. Alrighty, well, that's kind of it in a nutshell. And I think it's just really important to understand that even though it hasn't occurred yet, this is the local stock market here, the ASX 200, and even though it hasn't occurred yet, expect a correction across here. And when I say expect, we're sort of up in the 90% sort of area of expecting that to occur. So, you always get the opposite of what you're looking at, and here we're looking at a trend, and there's a lot to suggest that we will be seeing a larger correction here. So that really means trading less and smaller position sizes, and basically go into sort of protection mode somewhat. But it's also important to trade what we see. So, we need to trade if volume's coming into the market and the price is pushing up, then we need to work with the closest, largest number and stay with the trend as well. So it's not to throw the sort of the baby out with the bathwater, so to speak. So we need just to be a little bit more diligent and trading less and smaller position sizes and closer trading ranges and taking more profit at the next number and so forth is certainly the way to go here. So I'm just stressing that to be a little bit sort of important, and I've been harping on about it as we've been approaching it. But I feel that because the S&P 500 has touched on the on the 1500, then it's likely to see more, but it will be something like this here: a correctional pattern, then a push up on the S&P 500, and then a larger pattern. That's kind of what we're sort of looking at here. So this is basically the process for the global markets. So you just need to be aware of that, and and just trade shorter ranges. Really, that's it. But it's important not to lose money while this process is unfolding. Once it's completed, then we can look at trading the next trend to the upside. Alrighty. Well, good morning, good luck, enjoy the day ahead and the weekend. Cheers.